Hi everyone. I'm so excited about today's video because this is where I get to walk you through the budgeting tool that I have created. I use this tool personally. I've been using this to track my financial independence journey for the past 12 years. And now I get to share with you, and I hope it is a blessing for you. A budgeting tool is so important for anyone who wants to take control of their money, to basically understand where their money is, how their money is bringing value into their life. I created a video that walks you through all the major points that I believe outline why budgeting tools are so important. So if you'd like to go ahead and watch that video first to get a basic understanding of just the importance of budgeting in your financial freedom journey. Now, so what you can expect in this video is I'll walk you through a live demo of what I would do with a client consultation. Basically, some people hire me to help create a budget for them, help them understand how to use their money most effectively to achieve financial independence. And with this video, we're just going to go through it together with an example. I hope you enjoy it, and let's get started. Here's the file that we're going to walk through. The file is called the 2024 Budget Template. It has really three simple tabs: the input form, the tax calculation, and the actual budget sheet. And we'll walk through each one of them together so you are familiar with how to use it. The first sheet, the input form, you answer a few questions. The first one being your tax filing status. You can select single, married joint, married separately, or head of household. Majority of the clients that I work with are either single or married joint. So I'm going to go ahead and select married joint for this exercise. But when you do it for yourself, of course, select the one that's appropriate for your tax filing status. The second question asks if you have a state income tax. For the state of Indiana, where I live, there is, so I select yes. But if you live in a state like Florida, which does not have a state income tax, you would just select no. If you select yes, you want to indicate, give a rough estimate of the combined state and county tax rate. So for Indiana, it's roughly 5% when you combine the state and county tax rate. But if you live in other states like Virginia, for example, it could be closer to 8%. And if you live in New York City, it could be closer to 10%. And you live in California, it could be closer to 12%. So to get your budget as accurate as possible, you need to indicate approximately how much you pay in state and county taxes. So for Indiana, we're going to select 5%. The next question asks, how many dependent children under 17 years old at the end of 2024? So I have two kids under the age of 17, so I put two. If you have three, put three. If you have four, put four. Okay. Basically, it will calculate that each child, you get a $2,000 child tax credit. And then you want to enter the total gross income. This is before taxes. Basically, what you expect to earn in your salary, what your employers will put on your W-2, right? So I'm for this example, let's just put 75,000. So if both you and your spouse have income, put both of your gross income. Remember, this is before any taxes are applied, before any deductions and all that stuff. Okay. Okay, the last four questions deal with some tax deduction that are most very common. The first one being a health savings account. Okay, so the health savings account contribution limit for 2024 is 4,150 for self-only coverage, and it's 8,300 for family coverage. If you are 55 and older, you can contribute an additional $1,000 as a catch-up contribution. Okay, so this family, as an example, is married. So I put 8,300. They're going to take advantage of the full amount. Now, if you only want to contribute 5,000 to your HSA and you're eligible for 8,300, then just put the 5,000. Don't put the full amount. Basically, right here, you're indicating what you are committing to contributing to your HSA. Next, the pre-tax 401k or your traditional 401k. The limit for 2014 is 23,000 with a catch-up contribution of 7,500 for those 50 years and older. Okay? So this person, even though they can contribute 23,000, they're only going to contribute 5,200, basically $100 a week. Now, keep in mind, this is per individual. So if your spouse is going to contribute 5,000 and you're contributing 5,000 to your 401k, then the total you want to enter here is 10,000, the combination of both of yours. Okay. The traditional IRA limit is 7,000 with a catch-up contribution limit of 1,000 for those 50 years and older. Now, this is also individual as well. Even though this person could contribute 7,000, this person can only wants to do 5,000. Okay, so just put whatever amount. So if your wife, if you and your spouse both want to do 7,000, then that means you put 14,000. Okay. Now, next is the cost of health and dental insurance. So whatever your employer tells you is the cost of your dental and health insurance, enter that here. For our example, it's going to be $100 a month or $1,200 for the year. And this is important to get right because it impacts your taxes, which we will see in the next tab. Here in the next tab called the 2024 tax calculator, I bold in red, do not update any of this. These are automatically generated. There are dynamic formulas, meaning they will automatically update based on the inputs you referenced in the previous tab. Okay. So here, remember in our example, this person is married and filing joint. The gross income we indicated was 75,000. Now, remember the HSA, they're going to take advantage of $8,300. They're going to contribute $8,300 in 2024 to their HSA. And their health and dental was $1,200 for the full year. Therefore, their taxable income for Social Security is 65,500 because an HSA and health and dental premiums from your employers are not taxable at all, even for FICA. Okay, so now married joint and filing jointly, the standard deduction is 29,200 for 2024. And pre-tax 401k, remember the 5,200, and traditional IRA 5,000. Both of those are deducted from your taxable income for federal purposes, meaning your federal taxes, there are no federal taxes for pre-tax 401k and traditional IRA. Okay. Therefore, what this means is that your federal income tax, total federal income tax is 2,668. Okay. These are this is about 99% accurate. All right. And your FICA tax is $5,011. Okay. And then your state and so the total of your total state and county taxes is 3,275, the 5%. Okay. So your total taxes before tax credit is $10,954. Basically the combination of these three numbers. Okay. Now, the child tax credit is $2,000 per child. So we got two kids, so that's $4,000. So therefore, your total taxes after tax credit is $6,954. If you want to see the math and the calculation behind all these numbers, you can see it right here, right? I created this spreadsheet with the intent of being easily cell reference. Whatever you select and fill out in the fill out input form, it automatically knows what number to input for you and do the calculation. Here's the tax level calculations, your FICA and Social Security and Medicare tax and all of that stuff. Okay, it's very dynamic. So do not touch this calculation. Just leave it alone. Let the spreadsheet do its work. Okay, let's move on to the final tab, the actual 2024 budget sheet. Okay, here's the 2024 budget sheet. The first thing I want you to notice is on the top left corner here, it's a summary of what we had just discussed in the previous tab with the tax calculation. We start with your gross income, in this example, 75,000. Here's the FICA taxes that they're going to pay, the federal taxes they're going to pay, the state and county taxes they're going to pay, and the child tax credit they will receive. Therefore, the total taxes is 6,954, which we had discussed earlier. So their total annual income, what they get to keep after taxes, is roughly 68,000. Now, I want to preface this that this will get you close, but there are other deductions and credits you may be eligible for when you actually do your 2024 taxes. But to use this number for your budget, when I do it for myself, I'm usually within $1,000. Okay, so this is very close. Now, let's start populating your budget. Okay, so the first thing I want you to notice is this. Columns E are pre-populated. Basically, I made a list of all the things that throughout the years I noticed that people want to capture buckets of expenses that they want to, allocate money to keep track of throughout the year. You are free to update and change this, the orange cells to whatever category that fits your family, because some of these categories might not apply to your family, and that is fine. Okay. All I ask is just change the name of it. Don't copy paste, cut cells, move rows. These are very sensitive to formula. So it's better that you just, say if you don't have a mortgage, right? And you want to just say property taxes, you can just easily just change it to property tax. Okay. Okay. Or if you find yourself like, hey, I have more additional bucket item that I want to be listed and captured that's not there, just go down to these last four. There's a placeholder for four additional expense items and they're labeled as other, and just change it, right? Just change it to whatever you want. Just type it in. Okay, so you know exactly what it is. So basically, let's start out with this, okay? I want to start with this. Notice that the first four line items are already populated for you. And it's because these are amounts that you had already indicated in the input form in the first tab. You indicated that your health and dental expense for the year was $1,200. So that's your first line item. Second line item was your HSA. You said you were going to contribute $8,300 through your employer. The pre-tax 401k contribution, in this example, they were going to contribute $5,200. And traditional IRA contribution, they want to contribute 5,000. So already they have already allocated 19,700, which is this number right here. It's a running total. Whatever number you put it tells you exactly how much expense you have already allocated to the buckets. And then down here in green, as long as this number is in green, it tells you the money left over. You started with 68,000 in this example. You are already allocated close to 20,000. So therefore, your money left over to be spread amongst the rest of your bucket items is 48,346. Okay. Let's just keep playing along with this. Okay. I'm a Christian and church contribution is really important to me. So that's always one of my first items, right? So let's say this person wants to contribute, let's just throw a number, 7,000 for the entire year. Want to be committed to $7,000, right? Which is 10% of their budget. In column G, it gives you a percentage of the income, percentage of your annual income after taxes. Okay. And let's say they have a mortgage and it's $2,000 per month. Okay. 2,000 times 12. Okay. There you go. And they have water utility. Let's say it for water, it is $50 a month, right? So 50 times 12. And let's say for natural gas, it's $100. Okay. They think it's $100 per month. Now, sometimes natural gas, right? So during the spring and summertime, because we're using our air conditioning and not using our heater, our natural gas bill might be actually only $20, right? So what you could do is you could budget this way. Say, hey, for the first 6 months out of the year, it's let's say it's $20 times six. But for the for the winter months, it gets really cold and you use a lot of natural gas to heat your home. So you can say, I want to budget $100 for 6 months. So you do $20 times six plus $100 times six. Still gives you the full 12 months, right? So you can do it that way. Electricity. Let's say it's 150 times $150 a month, okay? Evenly throughout the year. The sewer, let's say they have a sewer charge of $30 a month, right? Just making these numbers up. Just put in your numbers that works best for you. Okay, they have life insurance policy for both the husband and wife, and it's 200 each policy for the entire year, so that's $400. Groceries, they're gonna commit to spending $150 a week. Okay, so it's 150, and there's usually 52 weeks in the year, so $150 times 52. That's what. Okay, and eating out, they only want to spend $100 a month. Okay, so that's $1,200 a year. They have two kids, children's related expenses like clothes, field trips, whatever. Do not put gifts here. That's a separate line item I have for it. Okay, just put things that kids would need, clothes and all that stuff. So let's say they want to spend $1,000 for the entire year on children's related expenses. Children's allowance, they give their kids $20 a week, right? So $20 times 52 weeks. Okay. These kids are gonna be rich. All right. How about parents' allowances? Maybe the husband and wife said, hey, let's give ourselves the freedom to spend some money and just designated that we can spend it whatever we want, whether it be a toy, a video game, some new clothes, whatever. So let's say they designated $100 a month per person, right? So that's times, okay, so that's per person, that's $200 a month times 12, right? So it's $2,400 for the year, okay? Look at here. I want to stop right now for a second, okay? You notice we're not even done filling out the form. And yet that the total expense has already reached 68,000 and money left over is only $26. They only have $26 left. So they cannot live on this. They need to change their budget. They need to reallocate funds from one bucket to another or basically reduce their spending. So let's talk about this next, how they can reduce their spending. Guys, so we left off where they need to reduce their spending in some buckets because they are running out of money, right? So we just said that they're at only $26 left and they still have cell phone, internet, vacation, gift fund, medical and dental out of pocket, home and car repairs, TV streaming, gasoline, right? Haircuts, all these other places. So they need to figure out how are they going to budget for it. Okay, so let's look at this. Let's just fill out some. So cell phone, I think that's a must have, right? So, and let's say they spend $50. Okay. Now they're in the red. You see how that turns red when you overspend? Okay, but let's keep going. Internet, not $50 per month. Okay. Vacation, let's say they want to spend $2,000 on vacation for the full year. They want to go on one vacation. For gifts, birthdays, and holidays, they want to spend, let's say, $500 for the full year, right? Medical and dental out of pocket, right? You got prescription medication, you got your deductible and all that stuff. They're pretty healthy. So let's say they only do 500, okay? Home and car repairs, they have to change their oil, right? The car oil. Things happen. So let's say they budget, I don't know, 500 for that. TV streaming services, they got Disney Plus, they got YouTube TV, Hulu, and all that stuff. So let's say it's about 60 bucks a month. Gasoline for the car, okay? They got 2 vehicles. So, and each, so they fuel up twice a month, let's say. So it's 150 times 12, right? Let's say that. Haircuts. Let's say they do haircut, 20 bucks a month times 12. Okay, emergency fund, etc. Okay, look at here. Just want you to notice something. Right now, remember we said their annual income after taxes was $68,000. Their total expense after filling out everything was is 75,480. That means they are over by $7,434. Okay, they can do two things right now. One, they have to reduce their spending, cut their discretionary spending, like children's allowance, parents' allowance, children's related expenses, eating out, groceries. These are things that they are in control of. Some things that they are not in control of are, for instance, mortgage, utilities, right? Just because utility, you spend $100 already, and you don't just all of a sudden say, "Hey, we can't take any more showers, no more water," right? That's not really practical. But things that are practical, like grocery bills, you can redo that. You can commit to saying, we're only going to spend this amount. And if we spend that and there's a week left, well, we're just going to eat whatever's in our pantry. We refuse to go grocery shopping, right? Those are things that you can control. So either you reduce your expenses or you increase your income. So I would recommend, if this couple is just working the typical 8 to 5, the 40 hours a week, and they're serious about y- saving money, because right now they're spending everything they make. Well, they are saving for their 401k and Roth IRA. Okay, but to get real serious, to make sure they have what they need and be comfortable, if they want to avoid getting to like credit card debt to maintain their lifestyle, they need to get a part-time job. They could work at a grocery store or at Walmart. They can work at Target, 3 or 4 hours several times a week, and that would be enough to hold it, to maintain this life, to cover the gap of 7,000, right? So that's an option. But let's say they want to try to live within their means and reduce their expenses. So what you would do is, look for areas you could seriously cut and be serious about committing to. Don't make up fake numbers just to make the budget work, but make commit to, both you and the spouse, commit to numbers that are realistic and you can, hold yourself accountable to. So let's start with the first one, groceries. It's a good one. Right now they're spending $150 a week, right? And let's say they say, well, we're gonna try to live within $100. Okay, $100, 52 weeks. Okay. Wow, look at that. It went from 7,000 to 4,800. So it dropped significantly. That was a big savings right there. And say eating out. Well, they need to cut that and they say, well, we're only gonna eat out every other month, right? Instead of once a month, they're gonna say every other month. Okay, so $100, 6 months. Okay, they're chipping it away. There's $600 right there. Children's related expenses. They say, well, I guess we can, instead of buying new clothes, we can go to Goodwill or secondhand, or just lower that extent. So instead of 1,000, they say, well, we're only spending 500. Okay, so 250 each child. Okay, children's allowance. They were giving 20. Now they say, well, let's cut that in half and just give $10. Okay, now we're down to only negative 3,200. So we still need to find $3,200 somewhere. Here's a way: parents' allowance. They were saying, hey, $100 a person, so that's $200 a month, and 12 months, that's 2,400. What if they cut the half and everybody only gets $50? All right, $50. And now they're down to 2,000. Okay, you can't really find change cell phone, internet. That's pretty, flat. Well, okay, vacation. Now they budgeted 2,000. Maybe this year they need to do a staycation, right? Instead of going out, hotels, eating out, and all that stuff. Why not? They're gonna say, "I'm gonna do a staycation." So they cut it in half, 1,000. Look, now they only need to find $1,000 to fill that gap, right? They say they got gifts, birthdays, and holidays. Instead of doing brand new gifts, they say, "Hey, why don't we do, you know, just cards, or just lower the amount. Instead of doing 500, they say, hey, let's just do 250." Okay, medical and dental, home and car repairs, TV streaming. Oh, look at that, 720. Okay, instead of doing streaming, they're gonna say, hey, we're gonna have to pick. We don't need all three or all four streaming services. Do we really need Netflix, Hulu, Disney Plus? All of these we're gonna cut it. We're gonna cut it in half. We're only gonna do $300. Now they have 344. Okay. So now there's nothing really left to cut, right? So then they say, well, to make the budget work, we're gonna cut the parent allowance. They're gonna sacrifice it and make it work. So they're gonna make it 900, right? Basically 850. Let's just do that. Boom. Look at that. After going line by line, this is why it's so important to go line by line and have agreement with your spouse. Is because math never lies. You only have 68,000 to spend, and they're spending all 68,000. Not They're allocating it, basically giving it a purpose. Every dollar has a purpose. So now they have money left over of $6. They're in the green. Perfect. Okay. So now you have the budget. Both everyone involved in this discussion stacked hands. We're all in agreement. Now we're ready to go talk about actually filling it out when the new year comes, January 1st, 2024, right? That month starts. You know how much you can spend every month or allocate, right? The ones in green, in gray right here, those automatically comes from your paycheck, right? So what you do this is this. Look at the top row right here. This is for your income, what you see in your paycheck. Hopefully your withholdings are correct, and they're not taking too much more than a lot of taxes from you than necessary. Okay, so gross income. Let's just hypothetically, it said you get paid twice a month, which is typically what everyone has. So you just enter the gross amount before taxes. Okay, and let's just say it is, you know, uh, right here. Let's just say it is $5,500. Okay, so you enter that. Okay, so it's like 2,500 times two. You get two paychecks, each one 2,500. Let's just hypothetically say, okay. All right. And it is actually, it's closer to 3,000, right? 3,000 each. You get the point though. Okay. So then what's your FICA tax? right? So you enter your FICA tax. It's on your pay stub. Get your pay stub up and enter whatever it says. And let's just say it was, I don't know, 200 bucks. I'm just making numbers up, but you just enter what it says. Federal taxes, let's say it was, they withheld 500 bucks, okay? And state and county, they withheld 50 bucks, okay? So total income after taxes is 5,250 or whatever it is on your pay stub. Okay. You got two pay stubs. You enter the information twice. Okay. And you know the health and dental, right? It's 100 bucks, right? Because you know what it is. It's $100. And every month you're committing 692 or whatever is on your pay stub that's going to health and savings. You say 692. Okay. Okay. And then right here, actually, let's do 691. There you go. Okay. 100. Okay. So right here, let's say it's the pre-tax. Let's do 432, whatever it is, right? Just enter whatever it is. Traditional IRA, right? And you're saving this in your own IRA, making monthly contributions to it. Okay. Whatever, 416. Okay. Your church contribution, you know you want to aim for $583 a month, right? Because right here, column I gives you a ballpark how much you should be allocating each month based on what you want to commit to annually, right? So you do the 583, right? These are all rounded. So let's say I'll just do 582 right here. So it stays green. Okay. But notice here, the mortgage, okay, 2000. Okay. Let's do utilities. Let's say it's 60 all of a sudden. Okay. You notice how it turned red when you enter 60? The reason is it's because the worksheet knows that your goal is supposed to be $50 a month and you exceeded it. Okay. And it just pops, alerts you something is wrong. Now you notice these are all in green. It shows that indicates you're on target. You're below your budget. You're right below it. When you're exactly in it, it turns white. That means all good. Green means you're favorable. Red means unfavorable. But we know it's okay. The reason I know it's okay is because of this. Notice this. If you go, I'm skipping all four. Okay. Notice the column W. It's your total for your annual amount. As long as your annual amount does not exceed your annual amount budgeted, you should be fine because we know that something like utilities, you're not going to expect exactly how much you budget. It goes up. Some months is 20 bucks, some months is 40, some months is 50, 80, whatever, some are 20. But in average, you're going to get that amount, right? So let me give you an example. Watch what happens here. Let's use utilities still, okay? So it keeps going, increasing to 100, and then it was another 100, another 100. Man, a lot of hundreds. So you really underestimated, right? But notice what happens here. Your total amount is 660, and it's turned red because it's indicating to you, it's smarter, the worksheet is smart enough, it's telling you that the amount you budget for an entire year is insufficient. You need to update your budget to cover not only what you have already spent, but also for the remainder of the year. You still got 5 more months to spend, right? So if the rest of the months are $100, right? That means you need to at least watch. Let's just make it $100. Let's just pretend, okay? You need at least 1160. You need to project, forecast, and say, hey, if I'm spending $100 the last 4 months, realistically, my utility is going to be $100. Then in the future months as well. So go ahead and budget for that. So instead of 600, you really want to be 1200, right? Because you want to make it realistic. And when you do that, notice all of this. It becomes, instead of red, it becomes white, right? But notice what happened here though. Now you're in the negative. You're negative 594 because you increase your utility, your water, because you predict that in the future months it's going to be $100 and not the $60. So what do you need to do? Right? Yeah, you need to reduce somewhere else. So you might say, hey, turns out we can't go on vacation this year. Not only can we not go on that fabulous out of state trip, now we really have to, hold back our vacation fund. And instead of $1,000, we might have to do what, $400. And now you get back into the green, right? So it's like a game. You move money around to make sure it works, right? This is how you hold yourself accountable. This is how you track how you are doing against the goals and the milestones you set for yourself each year. Okay. All right. I know I've said a lot, but it's really simple. Every month, you basically fill out how much you got paid, right? Gross income minus all taxes, just outline all your taxes. And then literally get your credit card statement, get your checking account statement. If it's the two of you, one of you read off, okay, here's how much we spent on grocery. Read off all your Walmart, all your Target, all whatever, grocery related. Here's how much we spent on utility. Here's water, gas, electric. Here's how much we spent on gasoline. Read it all off, right? So you have captured for that month every expense in your credit card statement and in your checking account within that period of time. And this is what I do every single month, at the end of every single month. Okay. And I've done this for 12 years. And this is how I've been able to successfully save money and save for early retirement because I had a bucket item that says early retirement savings. And so I was tracking to see how I was doing to ensure I have a buffer, right? That was one of my goals. So I have to have a cash fund to sustain myself not working a traditional job. So that can be one of your goals. Another one of your goals could be saving for your children's college fund. You can have that, right? Another one of your goals could be, I don't know, like a vacation, a Disney vacation that costs $10,000, but it'll take, 5 years to save up. Saving 2,000 extra a year in 5 years, you'll have 10,000. So you can have a bucket that says, Disney fund, right? Whatever it is, you want to outline it. But here are some things I want to make sure you guys understand. Whatever goals you set for yourself, whatever bucket items you set for yourself, especially if you are a couple, you have to be in agreement. You have to negotiate. You have to talk things out, listen to each other, and figure out how both of you can support each other, reach the goals that both of you want. Okay. And that takes compromise. It takes listening and understanding. Right. But once you have that down and once you start tracking and holding yourself accountable, it's going to be a wonderful journey. That doesn't mean you're not going to have challenges, but it's going to impress upon you that you have control over your money. All right, that's it. That's everything I have. And if you want a copy of this spreadsheet to work on your own, it's going to be absolutely free. All I ask is that you contact me, send me an email. My email information's in the link below, and just request it. All I ask is that you like my Facebook business page, you like and follow my YouTube channel, and like this video and share it. and I would be happy to share this tool with you, and hopefully it helps you on your financial journey. I'm very excited about it, and I hope you are too, and I hope it helps you. Have a great day, everyone.